Now when it comes to the property plant equipment 16, INDAS 16, so I highlighted that property plant equipment, they are the assets and it comprises of like say land and building, machinery, it also comprises of like say ships, aircrafts, okay, it comprises of machines, okay, and motor vehicle, furniture fixtures, office equipment, okay, and bearer plants. Now let us talk about the valuation. So first of all, the property plant equipment, it can be valued at a cost model. That is cost minus accumulated depreciation minus accumulated impairment. And there can be a revaluation model on the subsequent level. Revaluation model, say asset can be revalued at a asset can be taken at a revalued amount, or the fair value at the revaluation, less what you can say less subsequent depreciation, subsequent impairment, minus accumulated depreciation and accumulated impairment. That's the thing here. Now, so property plant equipment, there should be grouped as per the class of property plant equipment. Grouping should be done which is of a similar nature and which is used in the entity's operation. So the grouping should be done based on the similar nature. Say for example, group of land are grouped. Then land and building is grouped as one. Machinery is grouped as one. Ships is grouped as one. Aircraft is grouped as one. Then machinery is grouped as one. Okay, and furniture fixture and is grouped as one. Fixture means something which is attached to the wall. Then office equipment is also grouped as one. Okay. Then also bearer plants, they are also grouped as one. Okay, that's the thing actually here. Now asset is revalued. So suppose say you tell that the assets are revalued, that one particular asset of a group is revalued, then entire group should be, or you can say it should be revalued. There should be revaluation of the entire class of assets. All the class of assets should be revalued. That's the thing actually here. Okay, so this is the thing actually here. All the items of like say property plant equipment is required to be or you can say revalued. That's the thing actually here. So all items of property plant equipment is required to be revalued. That's the thing here. Then next one what we have, my dear soldiers, is the revaluation upliftments. Say for example, revaluation, so suppose say there is an increase in the value of the asset. Revaluation upliftment means there is an increase in the value of asset. So in such case it is taken as to equity, it is shown in equity as revaluation surplus through the other comprehensive income. So that is the thing actually. So you have to show as a revaluation surplus through other comprehensive income. Take example, the asset was 100 rupees. Now the value is taken to say 150, say 150 units is the value. So 50 rupees is the revaluation uplift. Now that has to be shown as a part of equity through the revaluation surplus through the other comprehensive income. Now second thing, there may be increase in the P&L. How there may be increase in the profit and loss? There may be reversal of revaluation decrease of the asset which was recognized in the P&L. So suppose say if there is any decrease in the value, is a revaluation, there is a reverse in the revaluation. So suppose say there is a revaluation decrease you have done. Now that you are reversing, then it will be taken to the P&L. So for example, say there was a revaluation loss of 60 rupees. So now what happens? That 50 rupees will be adjusted to the revaluation surplus which you have earlier recorded, and 10 rupees will be taken to the P&L. Okay, that is how it is. So what happened? Initial value of the asset was 100. Okay, now the value of asset is taken to be like say 150. Okay, 50 rupees is the revaluation uplift. That 50 rupees, what you do is that you show as a equity under revaluation surplus through other comprehensive income. Fine. Now there is a revaluation loss or downwards. So in such case, what happens? Say it is of 60 rupees. So whatever revaluation surplus you did for 50 rupees, that you knock off, and the balance 10 you take it to the P&L. Again next year what happened? There is a revaluation uplift of 30 rupees. And in such case, already you have knocked off that 10 rupees in the P&L. that you adjust, and balance 20 you have to show as a revaluation surplus through other comprehensive income. It has to be shown in the equity. Okay, this is how it works actually. Okay soldiers, with this I'll see you in the next video.